perhaps could result in more people consuming more power, sitting in their homes, consuming more in terms of air conditioners, etc. As Vivek was pointing out, the Power Ministry has said that they have invoked Section 11 of the Electricity Act to meet that expected rise in power demand. They expect peak electricity demand of 229 gigawatts in April of 2023. So everything ties in, I guess. Harshvardhan Dole is joining in, to talk more about that. Harsh, there's also a lot being done by the government to avoid power shortages. Tell us a little bit about what this means for the industry and which are the listed stocks that could be beneficiaries of this.
Well, firstly, I must compliment the government for the pragmatism that they're currently showing. It's good that, even before the summer is yet to hit us, preparedness is underway to ensure that there are no power outages or, there is scrambling for power. And to that extent, invocation of Section 11 or asking utilities to import coal is a step in the right direction. What is surprising is on a higher base, the power demand growth has sustained in double digits. So, all fingers crossed that such momentum continues and such preparedness kind of, works in favor for the whole sector. From a stock perspective, I think what we continue to like is the utility space, the regulated ROE companies, which are currently operating their plants at nearly full throttle and who are well placed to pass on all the cost variation to end consumers. So we'll prefer to play this whole theme through the regulated entities like NTPC and HPC Power Grid, where at least cash flows are more or less secured.
So, I mean, unlike the last couple of years, right? I mean, summer season, the usual headlines start to come through. Coal stocks running low at power plants. Coal stocks worth only this much. Power demand is through the roof. I mean, that was a big one last year as well, the year before as well. So, you think, Harshvardhan, this year should be more, we will avoid that kind of a situation?
Well, the preparedness from the government surely indicates that there is willingness to, address the peak power situation well in advance. For example, the CERC stance to create a parallel power market whereby, utilities can buy power up to 50 rupees a unit will certainly prompt, gas-based power plants or even certain imported coal-based power plants to take risk and essentially sell power on that particular, market. And since in these markets, margin has to be provided well in advance, I think there is incentive for even some generators to take this kind of risk. So in my opinion, the structure of the market is turning more favorable towards the generators incrementally, which is actually very good.
All right, Harsh, morning. You mentioned three stocks. That's NTPC, NHPC, and I think Power Grid. What are the target prices you have out there? Yesterday, in fact, NTPC was an outperformer.
See, NTPC to us is absolutely a no-brainer. It is the largest generating entity in India with a solid, formidable balance sheet. And it can potentially keep on adding 6,000 to 7,000 megawatt of capacity each year for a protracted period of time to ensure that India continues to get 24/7 power. The valuations are even now, after a massive outperformance, are undemanding. You're still getting the stock below 10x on 1 year forward earnings. And the dividend yield is pretty impeccable at, say, 6% plus. And the best part is the capital allocation from a utilities perspective is changing positively. So all, indicators are turning green, and therefore we continue to like that stock. Our near-term target price on NTPC is 200, which will keep on progressively revising upwards.
Okay. What about exchanges like IEX, for example? What is the, the outlook over there? The power exchanges?
See, as an exchange, we like the business. My colleague who covered the stock is a bit mindful of the valuations. And, perhaps when valuations become more attractive, as a house, we may turn more constructive. But as a business, that's a good business with solid, tailwinds.
Okay, Harsh, we'll let you go on that note. Thanks a lot for joining in and giving us a quick take on what's happening in the power space and the way forward for that. Well, in pre-opening, the market is very, very quiet. So just about adjusting. I think we can get some rates in as well. Remember, we'll get you our exclusive conversation on Tata Power with Praveer Sinha of Tata Power.